Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some selling pressure today. 10-year note futures lower for its second session, and today we're looking at the futures market trading down to the lowest level since last November, making new 2024 lows here today. When you look at the price action, currently at 107.12, so the lower half of the 107 handle today as the market continues to realize heavy selling pressure for a second session, and today we're looking at volumes picking up as well on this selling pressure. And really the driving factor today was the data points this morning, GDP data coming out. Now the headline number for GDP showed slower growth in the US, below the 2.5% target at 1.2%, I believe. But the bigger storyline was the data points within the release highlighting inflation. And inflation coming in stronger than anticipated for the first quarter, shifting that dynamic that was in place in the fourth quarter last year where inflation was running about 2%. Now we're looking at it running over 3% based on the new numbers. And even though the expectation was we were going to see a pickup in inflation in the first quarter, the data released this morning was actually higher than the expectations. And that's why I think we're seeing continued selling pressure in the treasury markets. And looking at the yields today, the 10-year yield now up to 471 basis points. That's the highest yield since early November of last year. And we're also experiencing the yield curve moving higher pretty much across the board today, from the 1-year all the way out to the 30-year. We're seeing selling pressure pushing those yields higher. The 2-year now trading over 5%, or so. The 2-year note is yielding back over 5% now with the most recent selling pressure. So the yield curve moving higher here by 4 to 6 basis points today, pretty much across the curve. So selling pressure on the heels of some stronger than expected inflation data. Now tomorrow, PCE data in the morning. That's the Fed's preferred measure of inflation. So that could either confirm or shift the dynamic in the treasury markets tomorrow morning. That will be a big number. A lot of market participants keeping a close eye on that as we see the yields now moving up to 5-month highs.